Good morning, traders, and Happy New Year. This is Frank Cholly with RJO Futures in Chicago, coming to you on Thursday morning, January 3rd, with your grain market morning commentary. Currently, grains are trading a little lower across the board. Corn is 4 to 5 cents lower, soybeans 16 to 17 lower, and wheat is steady, maybe 1 or 2 cents lower. The grain market correction continues. Yesterday, outside markets were very strong, and most commodities were led higher by the strength in the equities, as you know the market was cheering that we avoided the fiscal cliff. But the grain markets, because of the holiday, had a delayed open. They opened at 9:30 Central Time with the pits, and that market opened sharply higher, and the sellers came out aggressive, sold grains hard yesterday. We had a sharply lower close. So there's a lot of things going on right now that you could try and blame this on, and one would be that the index funds are doing some rebalancing. It's the beginning of the year. They like to sell their commodities that had big moves and were big winners, and the grains definitely had big moves last year. And then they start to bargain hunt for commodities that haven't had that move yet. So maybe it has a little bit to do with the index funds rebalancing. Maybe it has something to do with the fact that South American harvest is getting underway. So buyers are going to turn to South America for crops, at least for the next month or two. And they have mostly favorable weather. And also, China canceled orders again. The dollar's been strong. So we sort of have the perfect storm of events going on here. We were already going through a technical correction, and it continues. Again, you hear me say this all the time. It's very hard to determine exactly where these technical corrections end, and usually it's a technical level that the market will find support, the buyers come in. And for me right now, we're talking March futures contracts on wheat, corn, and soybeans. For me, support in the wheat should come in somewhere 750, maybe 725, a little more extreme. But we're starting to see weekly support levels being tested now. And I would expect that, at some point, the market loses that downward momentum. Again, fundamentally, nothing's really changed here. We have relatively tight supplies. As our prices come down, we get more competitive on the world market. So 750, 725 into March wheat, I think, should hold. In corn, I would say 685, 660 area, that should probably hold. And in the soybeans, 1360, 1350 area. That those levels should find support. And at some point, we're going to start to look forward to our planting intentions here in North America. We are still in a drought. Things, in that respect could worsen. There is time for the conditions to improve also, but right now, it looks to me like we're going to be in a drought for some time, and we could plant a lot of acres. It doesn't mean we're going to get a lot of yield in the end. And we have a big report a week from tomorrow, the first quarterly report of the year. It's actually, for the fourth quarter, but this is a big report, and traders are going to, be focusing on that to get a better idea how much crop we got out of the ground for 2012, what kind of acres we're going to plant in 2013, and then we'll, start to talk about the weather again. So that's all I have time for now. Please feel free to give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.